Hey everyone, this is Alan Brochstein, and I wanted to do something I do not intend to do very often, which is to talk about stocks on YouTube. I talk about stocks all the time, but I do it at 420 Investor, not on YouTube for the general public. And my subscribers are paying me for to share my thoughts, and by putting my thoughts out in the on YouTube or wherever, it would kind of eat into my business model. So I hope you understand that. But I wanted to make an exception today because GTI has pulled back a lot. It's trading at about 50% below its all-time peak that was set in February. Not quite 50%. And this is not unusual, by the way, right? A lot of the cannabis stocks, MSOs, are down substantially uh, since the peak in February. And I've talked about this a lot externally and internal to 420 Investor. Things got ahead of themselves. A lot of people came into the market early in the year and thought legalization was going to happen right around the corner, and it just wasn't the case. Uh, in any event, I wanted to talk about GTI because it's finally breaking down, and a lot of people are really nervous. And I'm the first to say there are two open issues here that could bite investors in the butt. And the first one is I want to point out on the chart this day right here. It was the highest volume day in the last year on the American side, probably on the Canadian side too. Uh, and that was when the Chicago, I believe it was a Chicago Tribune, reported that GTI was under federal investigation uh, for campaign contribution violations, and the company quickly put out a press release denying this. And there's never been anything that came from that. But to me, that's like when you're following a company and you need to be aware of stuff like that. I don't think that's an issue, but the other one is very real. So GTI, to the best of my recollection, the company has never put out any guidance, and to the best of my recollection, they've always either met or exceeded expectations. But this is a tough quarter, and I can recall 2 quarters ago, so in other words, Q1, which was reported in May, there was a lot of concern because same store sales grew only very modestly in Q1 compared to Q4. It bounced back in Q2, but this type of move really caused a little bit of concern. And you can see when they reported that was in May, the stock went down. It's hard to tell because shoot, everything was going down, right? So, so I wanted to get those out of the way. There really could be a little bit of an issue here, but I'm going to tell you what I think the real issue is. So I spent a lot of time this weekend looking at the consensus numbers for uh, the the nine leading MSOs by I think by market cap, maybe by revenue. It's probably both. And so I'm trying to find it. So here we go. That's not it. So it's right here. So in that report, um, I looked at these nine companies and I just took the analyst expectations and came up with valuations. And my first observation, I put this out on Twitter. Wow, these stocks sure look cheap to me. I've been following the space for a long time, and we've never had such uh, numbers to work with. Positive EBITDA, uh, high sales, and growing. And the nine stocks had a enterprise value to sales average of 3.4 times. So the average stock was trading at 3.4 times 2022 sales. Enterprise value being, and I was conservative. I gave them no credit for cash. I just took their debt, added to their market cap. This was as of Friday, and 3.4 was the average. Well, the highest was GTI at 5.4 times. The lowest was Columbia Care at 1.9 times. But there are a couple other ones that were fairly low as well. So a little bit of a range there. Point being, on that metric, Green Thumb is commanding a pretty big premium when you consider that the second highest was Curaleaf at 4.2 times. And then I looked at EV to EBITDA. Again, these are comparing to what the analysts are expecting, not my own forecast. And by that measure, the average was only 9 times. Uh, and this is something, a year ago they were trading at like 20 times. And the high here was 14, which was GTI. It's lower now because the stock's dropped over 10%. So it's more like 13 right now. And then so that's a big premium, 14 to 9 at the time. And the lowest wasn't actually Columbia Care; it was Air Wellness. It's at 6 times. I also looked at PE ratios, and again, Green Thumb stood out as above average. Not, I don't think the market really uses PE, and not as confident in those consensus numbers anyway. So I think the real issue is this: GTI has been valued more than its peers, and so I think uh, it's held up better. And the relative valuation there has been getting higher because their numbers haven't been going up relative to peers. The numbers have been pretty constant. So I use Fibonacci retracements and as a tool. And what I've been showing my subscribers at 420 Investor for quite some time now uh, is the Fibonacci retracement from the move from the March lows in 2020 to the February highs. And just so that's what these are based off of. And so just to go back to we'll just look at a 6 month chart. So if you go back just a month ago, GTI was testing the 38% retracement. And I pointed out to I had no positions anywhere. And I pointed out in my model portfolios, and I pointed out to my subscribers that it was very possible we could pull back to the 50% because a lot of these companies had already done that. In fact, TrueLeave, which I'll just show you briefly, had pulled back using that exact same calculation, had pulled back to the 62% retracement. So TrueLeave had really underperformed its peers and had pulled back more. Again, to show you exactly what I'm talking about, the low from March to the high here was actually in March, not February, but pretty much the same number. So to me, what's going on with GTI is less probably about a fundamental problem, although there could be uh, an issue here uh, of soft numbers for Q3. And it's more about a technical correction. So, like I said, a lot of stocks are pulling back to the 62%. Their peers have pulled back to the 62% retracement and some more. And so, and I showed you how GTI bounced off the 62. So while I'm not predicting, as a matter of fact, I think 20 could hold. And I know a lot of people are out there. It's really easy to say, well, the stock's gone from 25 to 20, it must be headed to zero. But I think a realistic downside that, based on reason and not just, uh, you know, extrapolation of a trend would be that the stock could test at 62% retracement. I think that's going to take a disappointing earnings report, but I don't think 17 is that far from 20 in the scheme of things. And a lot of people are saying how bearish this chart is. I don't find this to be a bearish chart. And I say that because you know, we had a big run up off the lows in March to what was an uh, not an all-time high, but a multi-year high uh, in August, sorry, in August. And then we had a little bit of a pullback, and from the 16 level, uh, there was a sector-wide consolidation into the end of September, and then the stock kind of stalled up around 17. So, and that's where that again 17 is where that 62% retracement is. So my own take on GTI is that it's a premium company trading at a premium valuation. I think that what's been going on is a loss of confidence as all these other stocks have traded off more than GTI. And uh, I think one of the things you're going to see is some rotation out of GTI into some other names. And so while GTI is down today, and by the way, Columbia Care was also, uh, I flagged that as being relatively more expensive than its peers. And I think one could argue that GTI deserves a premium, but I would argue that the premium is too large. Uh, But if you notice, this is my focus list. Names like Verano, which appear to be a lot cheaper than GTI, are up today. Uh, Cresco is up today. Cureleaf is down a little bit. I'm just trying to find the big ones. Where's Trueleaf? And Trueleaf is up a little bit today. So I think that's what's going on. There's a lot of concern that there's this huge problem potentially at GTI, and I wanted to take this time because I don't think that's it. I believe that this is driven more by technicals and valuation as opposed to a huge fundamental issue. So if you enjoyed that discussion, this is the type of thing I talk about all the time at 420 Investor. I promise you, I will not be making a habit out of sharing my views on YouTube, but I wanted to do this today because I do feel like this is an important topic. A lot of people are flagging GTI breakdown here is being meaningful. And I've been saying this for a long time. I didn't have any position for many months in GTI. I held other MSOs like Verano. And the reason was what I just went through, that premium valuation and technical setup didn't uh, look right to me. But I will say that I did add some back this week for the first time in a long time. I don't think that GTI is necessarily one of the best investments among the MSOs, but I think it is a good one from my vantage point, and I expect there's a lot of conversation about what GTI might do in the future, and I'm not going to put a time frame on it, but I will not be surprised if GTI makes an all-time high. And I would also remind everybody, these institutions that have been buying shares at $30, some very recently, they're not going away. They still like the story, and so we'll see what earnings season brings. But I'm more optimistic on GTI than it seems like a lot of the social media that I'm seeing these days. So with that, take care, and I'll be back this weekend with my regular weekly update.